You can call this Wild Wednesday. It started with a trio of central banks cutting interest rates, and that led to a sharp drop in bond yields, highlighting the concern over trade tensions between the U.S. and China. That, in turn, led to a flight to safety. Investors piled into things like government bonds and gold. In fact, gold traded above $1,500 an ounce for the first time in 6 years. Stocks sold off, the Dow down nearly 600 points early on. Oil also sold off, falling more than 4%. But then the buyers stepped in and stocks reversed course. The Dow finished down only 22 points to 26,007. The Nasdaq rose 29 and the S&P climbed 2. The index's 2% reversal was its biggest comeback of 2019. Bob Pisani has more.
It was another wild day on Wall Street. The Dow plunging almost 600 points early on before rebounding to end essentially flat on the day. It was one of the great comebacks of the year. Mounting trade tensions have heightened fears of a possible global recession. That's put more pressure on central banks, including our own Federal Reserve, to keep cutting interest rates to get ahead of a sharper downturn. There were just several aggressive rate cuts announced overnight by central banks in Thailand, in New Zealand, and in India. That's why bond yields are plunging across the globe, with yields on Japanese and German bonds falling deeper into negative territory. Yield on the U.S. 10-year Treasury note falling to a nearly 3-year low early in the trading session. So no surprise that bank stocks like J.P. Morgan, Goldman Sachs, and Comerica sold off today as lower rates put pressure on bank profits. But stocks bounced off the day's lows right when the yield on the U.S. 10-year came off of its lows in the middle of the day. The two traded in tandem all day long. Despite the strong rebound in consumer staples and tech stocks, the more trade-sensitive industrials didn't budge much. Emerson, 3M, Caterpillar all underperformed today. In fact, since the start of August, when additional tariffs were announced, industrials, energy, semiconductors, they've all lagged the broader market. No surprise there. What do these groups have in common? Those are the global sectors most exposed to trade overall. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.